Hello, I'm Krista Das, and you're watching Smart Investing Market Review at TaipanFinancialNews.com. Markets have been very volatile lately, and investors have concerns about the economy, housing, and oil prices. Joining me to talk about overall market trends is Stephen Lord, editor of Trend Investor. Steve, you are a long-term investor. Do you think the market has entered a bear phase?
No, I don't, Krista. I think that the correction that we've been seeing the last couple of weeks has been certainly long awaited. It's not a change in trend by any stretch of the imagination. We have to remember that when the market fell 3% in one day recently, we'd been up 20% just since July. So you have to look at things in perspective. This is not the end of the world. 400 points in that one particular day is not what it used to be. We're not really tumbling off the edge of the precipice. We have a very solid, broad-based economic expansion underway. That's slowing down, yes, but it's still going to be puttering along.
But here's a surprising bit of information from a recent Gallup poll. Half of Americans still believe the U.S. economy is getting worse rather than better. How do you see the economy shaping up this year?
Well, I think actually one of the reasons why I am still sort of long-term bullish on the economy is because of that statistic. As long as half the people in the country are scared a little bit, then we know we're not all heading in the same direction. I think the general economy will probably grow 2 to 3% this year. It's slower than we've seen lately, but it is certainly part of, or it is certainly commensurate with a soft landing scenario, and that's exactly what we want Ben Bernanke to do.
Steve, we've talked about a few leading economic indicators. What other ones do you think it's important for investors to pay attention to, and why?
Well, two things I think are very important to watch. One is the consumer. 80% of the economy is driven by consumer spending. We have to make sure that the housing market and all these other things that are going on are not spilling over into consumer spending. So watch consumer confidence, watch consumer spending, retail sales, and stuff like that. The other thing I would look at very carefully over the next, say, 6 months is durable goods. See how the factories are doing. If that starts slipping underneath the 50, the difference between declining economy or expanding economy at 50, then we may need to rethink a little bit the 2% to 3% growth. If that starts to fall off quickly, we may have a problem later this year. But those would be the two things I would watch the most.
Now, Steve, global oil demand is expected to rise by over 1.6 million barrels a day in both 2007 and 2008, compared with a growth rate of 0.8 million barrels a day in 2006.
Right.
Of course, China accounts for about 1/3 of the projected growth in world oil demand. So, Steve, are oil prices going to surge back to record high levels because of this continued increase in demand?
I don't think they're going to surge. What I think we're going to see now is, the higher oil prices has sort of been baked into the pie, so to speak. What we're going to be seeing is a slow but sure tendential rise back toward higher levels. The statistics you just mentioned tell the story. Short-term trading here or there, oil over 60, oil under, it doesn't matter. You have 15,000 new cars a month being put on the road in China. You have Indian demand. They want to put 40,000 megawatts of new power on the grid just in the next year. That's more than California. The power demand around the developing world is off the charts, and that's going to continually push oil upward. Short-term trading fluctuations notwithstanding.
Now, the housing market. Analysts seem to be divided on whether it has reached bottom yet. The National Association of Home Builders shows a 14% decline in housing starts. Building permits are down a little over 2%. Do you think we're at the bottom?
No, I don't. I don't think there's a whole lot of spillover risk left over into the rest of the economy, but the housing market in particular, I don't think is at the bottom. I'm not sure it has terribly more to fall, but I do think there is still a tremendous building capacity. Remember, the house getting finished today was begun a year and a half ago or a year ago. So you still have a lot of inventory coming online that was really started when the boom was really strong. I think we need another 6 months to get to the bottom of the housing market.
Now, Steve, you're more of a big picture investor focusing on trends with long-term growth potential. What top 2 trends do you think offer investors the most profit potential?
Right now, I think, as we talked about earlier, oil or energy in general is one of the really long-term, pervasive, rising tide lifting all boats kind of things for the next 5 years. So I think getting a portfolio leveraged to the rising price of oil is very important. And I think the best way to do that would be in oil service stocks. Another area where I think sort of off the radar now, everybody thinks that we're going to be pulling out of Iraq in the next 2 years, and that's going to do it for the defense industry. I don't agree with that. I think the defense industry is going to continue to be very strongly funded in particular areas, namely defense electronics, surveillance, homeland security related things like that, certainly for the next 2 or 3 years, regardless of who's in the White House. So that would be another area I would make sure my portfolio was geared toward.
Huh. Well, that's interesting. Would you say these trends are immune to higher oil prices?
Sure. I mean, obviously, the energy is geared very much to higher energy prices, and I think it's a great way to capitalize on it. You want to be in the oil service stocks as opposed to the integrated oils. And defense is something, we've taken quite a long step from 9/11, and Iraq has really sort of diverted everybody's attention. But the risks are still out there, and the people in charge of the country are still going to spend the money where it needs to be spent to keep the country safe. And that doesn't matter whether oil's at 100 or 50.
Thanks, Steve.
Thanks,
I have to put an end to my questions now as we've run out of time.
Thank you.
If you'd like to hear more about Steve Lord, please sign up for a free subscription to Dynamic Market Alert, the daily e-letter that Steve contributes to on a weekly basis. You'll find sign-up information right here at taipanfinancialnews.com. Thank you for watching. I'll see you again soon. Have a great week.